Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have is, mention any two objectives of accounting. Before moving to the objectives, let's see what is accounting. Accounting is a process of recording, classifying and summarizing the monetary transactions of any business, and those transactions, the results of those transactions are given to its users or displayed or shown to its users so they can make appropriate decisions. So this is the very basic concept, or we can say definition, of accounting. So the two objectives of accounting is, first is to maintain a systematic record. So why is the process of accounting done? So that the transactions are recorded. So the first objective of accounting becomes to maintain systematic records. So accounting provides a systematic and chronological record of financial transactions. This helps in verifying, analyzing and summarizing business activities. Then the next objective of accounting is to ascertain profit and loss. So the business have carried on its activities. So at the end of a financial period, if the business have made a profit or loss, so that becomes the objective of the process of accounting. And how is it ascertained? By opening the profit and loss account. So to ascertain profit and loss becomes another objective of accounting. In exam, it was asked for only two objectives, but we will see the other objectives of accounting as well. As the first, systematic record of transactions. Second was determination of profit and loss, and the third is ascertainment of financial position of business, and that is done by creating or opening the balance sheet of the business. Next is assisting management. It is the result of the accounting information or accounting process is the accounting information, and that information helps the management in taking key decisions of the business. The next objective is detection and prevention of frauds and errors. So the process of accounting helps in detecting frauds and errors in the process. And the next objective is communication of information. So again, the accounting information, the end result of the accounting process is the accounting information. So one objective is to communicate that information to its users. Next is, or the last we can say, is assessing growth. That is comparing the growth of the business with the previous year financial results. So these are the objectives of accounting. Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have is, briefly explain any three advantages of single entry system of accounting. Before moving to the advantages, let us see what is the single entry system. So the single entry system of accounting is that accounting system where for each transaction only one entry is made, whereas in the double entry system, for each transactions, two entries are made. So it is the opposite of the double entry system. So as the definition says, the single entry system is a method of bookkeeping where each transaction is recorded with only one entry in the accounting records. This system is primarily used by small businesses. So the small businesses record their transactions with the single entry system. The key features of this system is it mostly focuses on cash book because it follows the cash basis of accounting. Then limited record keeping is done, that is detailed recordings are not done under this system. And there are no fixed rules of preparing the financial statements of business. So this is the very basic concept of single entry system. Now we move to the advantages of the single entry system of accounting. The first is simple and easy to maintain. Because only one entry is made for each transaction, it is very simple. So this system requires only basic knowledge of accounting. The next advantage is cost effective. Because again, this is the single entry system where the businesses that follow single entry system does not need to hire any professional chartered accountant or any accountant. That is why it is a cost effective system. And the last advantage is time saving. Because this system is very easy for recording purposes, it saves plenty of time for the business organizations. Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have is, briefly explain any two types of errors which do not affect the trial balance? So the meaning of this question is, it is asked that to mention two type of errors in accounting that does not affect the trial balance. That means when such errors occur, the total of the trial balance in the both sides remains same. So those two kind of errors are, the first is error of omission and the second is error of commission. So what is error of omission? When one transaction is omitted, that means when a transaction is completely omitted from the books, that means that transaction is not recorded. Neither debit or credit is recorded. So maybe the accountant forgets, or maybe the transaction, the receipts or the invoices of those transactions are not available, so it is omitted. So the trial balance still tallies in this case, so that becomes an error of omission. So when the transaction is completely omitted, then that becomes an error of omission. And in case of error of omission, the trial balance will tally because the whole transaction is not recorded at all. For example, here a cash sale of rupees 5,000 not recorded at all. So if that transaction is not recorded at all, it will not affect anywhere. So therefore, the trial balance will be tallied. The next error is error of commission. So what is error of commission? When a transaction is recorded with the correct amount but in the wrong account of the same type. So again, in accounts we have different type of accounts. So if in any transaction the amount is given same, but a different account is debited or credited, that kind of error becomes error of commission. So a transaction is recorded with the correct amount but in the wrong amount of the same type. For example, one customer's account instead of another's is an error of commission. So the debit and credit totals remains unaffected. So in this case, the debit and credit remains unaffected. For example, 2000 received from Ram was wrongly posted to Sham's account. So it is posted in Sham's account again. So here the trial balance, in this case it will not affect the trial balance, and so the trial balance at the end of the accounting period will get tallied. Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have is, briefly explain any three needs for preparing profit and loss account. But before going to the needs, we will understand what is a profit and loss account. So a profit and loss account is basically a statement that is prepared for a period of time to ascertain the net profit or net loss of the business. And what it states the expenses and income of the business. So in the debit side of the profit and loss account, the expenses, all the losses are recorded, and in the credit side of the profit and loss account, all the incomes of the business are recorded. In that way, we ascertain the profit or loss of the business. So a profit and loss account is a financial statement that summarizes a business's revenues and expenses over a specific period to determine its net profit or net loss. It reflects the operational efficiency and financial performance of an enterprise over a financial period. So this was the concept of a profit and loss account. Now we move to the needs of preparing a profit and loss account. The needs for preparing a profit and loss account is to ascertain the profit and loss. So again, at the end of the financial period, if the business have made any profit or loss, to ascertain that the profit and loss account is prepared. So this point becomes the need to prepare a profit and loss account. The next point is to evaluate business performance. That means if the business have performed well or not, has it grown or not, to ascertain that a profit and loss account is prepared annually. The next point is to support decision making. So the profit and loss account is a financial statement that provides financial data. With that financial data, decision making is done in the business. So these are the needs for preparing a profit and loss account.